Please remember that futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I author in my weekly written reports. Prices shown on charts and quote bars are in real time and take into account all known activity up to this point in time. If you'd like to read more of this disclaimer, simply hit the pause key on your computer screen. Welcome, traders. I'm Boyd Baker, and thanks for tuning in to my Futures and Options Update. This is a special edition, January grain update. We're going to cover a lot of the grain markets here, so let's jump right into it. Today is Thursday, January 21st at about 2:30 p.m. A lot of the commodity markets have been in prolonged bear markets. You're hearing about crude oil. How low can crude oil go? You're hearing about the big correction in stocks. This week, we may see an important low here in the stock market until the low that we took out on January 20th. If that's not taken out, wouldn't be surprised that we see a bounce in the stock complex. Also, the crude oil complex right into this $27, $28 area appears to be finding traction. Now, that being said, a lot of the commodity markets, the grain markets in particular, have been really in a prolonged sell-off here. This is the weekly corn chart, and for the better part of last year, corn market had a hard time getting above 450, and at the same time, you can see a lot of support developed here at 350. We're trying to work a little bit higher right now. We're at 367. The other week, we had the final USDA crop estimate here for 2015, and it showed a crop size of about 13.6 billion bushels. I believe the yield was right there at about 168.4 bushels per acre. Now, that came in a little bit less than expected. So what we saw here is a marketplace on the report put a little bit of a rally in place. So real good support, in my opinion, coming in down right at that 350. You saw that on the weekly chart. You can see it here on the daily chart. Same time, though, you're running into some overhead resistance right up near this 370 area on this downtrend line. So be careful here. I think the corn market can work its way higher, but you got a stochastic signal that's just about ready to kick out a sell signal here. So if you're bullish this complex here, let me just hold off a little bit, see what happens, see if it can come back down and challenge maybe this 350, 360 area. If you see that, feel free to give me a shout here. Let's devise a strategy for you. Now, let's move into the weekly wheat chart. And this is one of the markets that's really been the biggest bear market of all of the commodities. If you go back here a couple of years ago, we're $9. And right now, wheat prices are trading at what, $4.75. So wheat prices here in the past several years have cut themselves in half. World wheat is, the world is awash in wheat. Production has been very good in many of the winter wheat cycles, the spring wheat cycles. So you see prices really struggling down here. Now, at the same time, we got this big bear trend. The market is finding, in my opinion, good support right down here into this 450 area. Now, if we see a low coming in the commodity complex, again with these lows in crude oil and lows in the stocks, maybe, just maybe, we can see it coming in here in wheat. This is one of the most oversold markets, so it's something that I'd be looking for to develop. Now, it hasn't quite yet, but it is showing some signs here. Let's talk about this. We're seeing the wheat market here potentially form a head and shoulders bottom. You can see it here with the 460, 450, 460 area, head and shoulders. You really need this wheat market to break above this neckline here, right at about 480. Start working its way higher before I could say that for sure, not for sure, but at least technically, that this market has broken out to the upside. So watch this wheat market. It does look like it's showing signs of bottoming out. A confirmation, at least technically, would be if we can get above the 480 area here in the front month of March wheat. Let's jump right into the weekly soybeans. And beans, well, they're a market which are struggling also. You can see this market has really moved sideways here for the better part of 3 months. We're finding support down into this 850 area. It's really not showing a lot of life to the upside, having a real hard time getting above $9. South America has got a record crop on its way. They're getting much needed rains down there. So the yields in the second biggest crop in the world look to be very good. We had a very good crop cycle this year here in the United States also. I believe the USDA estimate had bushels at about 48 bushels per acre. So there's plenty of soybeans out there. And the market's having a hard time really getting above that $9 area. Now, this market, too, is showing some signs of life. Again, if we think that a bottom's coming in the commodity complex, one can look at beans. It's a formation which I've brought forth before. It's a possible head and shoulders bottom here, right down into this 850 area here. You can see it possibly developing, but again, it needs to do some more work. You really need to get a breakout above this neckline, above $9, where I think you can say that the soybean market has bottomed out. So let's see what happens, but it would be nice to see at least a breakout above $9 to turn bullish on this complex. Now, one area here in beans that we've talked about here a latter part of last year is the soybean oil market. And this market's a little bit more constructive, and the reason being is because of El-Nino. And El-Nino has adversely affected the palm oil production. Soybean oil is in direct competition with palm oil. So this is a market which actually had been showing some bullish signs here for the better part of last year. We had a real nice move out of the 27-cent area all the way up to 33 cents. The market has set itself back here recently down into 29 cents and is trying to show some signs of at least bottoming out here in the 29-cent area. Wouldn't be surprised that you could re-challenge this 28, 29-cent area in that zone, but the soybean oil market, that's a little bit more constructive based on the fundamentals. And if you get down into that area, feel free to give me a call. I'd be happy to devise a strategy for you, give you a specific option strategy as far as buying or selling the soybean oil market. If you have any questions on this update, I'd be happy to give you a hand. Feel free to call me here at 866-973-2079. What I'll get out to you is a free guide, an introduction guide on trading options, and I'll also sign you up for my free weekly futures and options update. It's a report that I write, and you'll get every Wednesday night as an email. Again, call me at 866-973-2079 if you're interested.